Thank you, Rocco, and good morning, everybody. And I suppose I'll pick up on the point that you finished on with Greg's view on this, that he wants to see the best out of this. The common interest in this panel is that we want to see the best possible deal for the United Kingdom and, indeed, frankly, for the European Union. And what it's based upon is what comes after the Malthouse agreement process, the Malthouse alternative, the alternative arrangements group that's going on under the aegis of Downing Street at the moment. We are presuming a successful outcome to that, whatever that might be, whatever that outcome is. This is completely independent of that, doesn't involve anybody on that other than Shanker, who sits on that. This is the view. This document reflects the views and expertise of the people on the panel, as Rocco outlined it. And so it follows on from the resolution of the withdrawal agreement, the backstop agreement, and so on. And it's all about what the subsequent future economic partnership should look like. Now, there are different ways of attacking an issue like this, and different strategies and styles of agreements that might be used. Shanker, when he talks, will lay those out to you and explain how we've chosen this particular way forward, and he'll also explain the key highlights of the free trade agreement that we're showing you today. The agreement is set up as a legal text. Now, there's a number of reasons for that. You've heard already what Rocco said about making it easier for business to plan around it, but it's precise, it's clear. There is no argument about a legal text in terms of what the intent and practicalities are. With a legal text, you accelerate the technical negotiation and you allow strategic agreement, overarching strategic agreement as well. And what's more than that, you can also base it quite explicitly on existing precedents. Why does, and indeed, you may see, just for your amusement, my marked up copy, all those coloured tabs reflect the precedents things are based on. So CETA is the orange tabs, Japan is the blue tabs, and so on. Agreements that the European Union has struck with other countries already. Now, it accelerates the process, but it also makes it more negotiable. Why? Because if the European Union has already struck an agreement with another country, it's clear that that agreement, or that element of that agreement, does not undermine the single market, does not undermine the four freedoms, does not undermine the principles of the European Union. An issue which we run into time and time again, you will notice, in the last 2 years in the negotiations today. So that's why the strategy, that's why the legal text, that's why the precision. Now, we wanted to create this draft treaty in a way that allows the UK to pursue other free trade agreements. Greg will major on that later, but specifically trade agreements with others such as the UK-US, CPTPP, accession, role in WTO, advocating greater liberalisation. All those things need to be allowed by the deal we are talking about. And again, Shanker will draw that out when he talks today. So the question that we've been trying to address, and I think we've done successfully, is can you minimise the trade frictions with the European Union in a way that still allows you those freedoms? That's the fundamental at the core of this thing we're doing today, the thing we're presenting today. Now, a few strategic points. Number one, some claim that the UK's independent trade and regulatory policy is not as valuable as others of us think. They argue that's a jam tomorrow, and we're giving up the bread today for the jam tomorrow, and so on. You actually can't make such an assessment unless you know what those agreements will look like. And then you generally find that they're bigger than you expected then. I mean, the New Zealanders underestimated the size and power of some of their own free trade agreements. People also say that trade agreements take years to negotiate, in particular with the European Union. But the bulk of that time, and again, particularly with the European Union, is agreeing tariff schedules, quotas, regulatory convergence arrangements. None of that is necessary in this. The only area where it overlaps is the regulatory divergence, how you manage regulatory divergence. And again, I suspect Shankar will take you through that. We have a unique starting point, and what this does, by creating a legal text, is allow us to even accelerate on that faster approach. The regulatory agreements will take longer than everything else, which is why it's important to start negotiating now, and I think Greg may well talk about that too. Now, as we've said at one of our previous presentations, Brexit is a global event. It's the first time a G7 nation has been adopting a whole new trade and regulatory policy in modern times, certainly in the last 40 years or so, the time of the WTO's existence. And it's crystal clear that the world needs growth arising from greater free trade. When you hear economists talking about the new normal of low growth and so on, it's because we're not doing enough to facilitate free trade, particularly in services and other areas. So the sluggishness that people are talking about amongst all the major growth centres is something we can deal with and solve rather than accept. And what this FTA is designed to do is to give us maximum flexibility, whilst maintaining the lowest friction with the European Union, maximum flexibility to work on that front, to accelerate the growth not just of ourselves, but of all of our trading partners too. Now, if the UK can achieve this, then it will benefit all nations in terms of all our trading partners, certainly in terms of increased growth, indeed all of those that fall within the free trade scheme that we seek to create thereafter. So before we take those opportunities off the table by taking an over-restrictive EU deal, we better be absolutely sure there's no other way to do this and actually take an approach which minimises the disruptions. Now, this is the beginning of a process. When you hear the factual base of it in a minute from Shankar and Barney and Greg, understand it's the beginning of the process. We are going to be taking representation from industry in the coming weeks so that we take what we think is a very good document as it stands and improve it even more so that when we do engage on the future economic partnership with the European Union, we are in the best possible position to argue what's good for us and good for them. Thank you. Okay.
Thank you very much, David. So you might ask, why we're launching this free trade agreement, this large tome here now. Many people in the room, no doubt, are anxious to find out about the Malthouse Compromise and what's going on over there. That is not what today is about. We obviously very much support the Malthouse Compromise, and we very much support the work that's going on in the alternative arrangements group. We think that's incredibly important for the future of the country. But what we're doing here is we're trying to answer the question, what does, once we start the negotiations and the discussion for a future economic partnership with the European Union, what could it look like? Point that I have made, and I think you'll see this from these little graphic things that you have, that there are two very different approaches to the goal of minimising trade disruptions and improving trade between nations. One is a free trade agreement sort of approach, and the other is very much this identical regulation approach that's currently used by the customs union and the single market. We are very familiar with the customs union and the single market arrangements because we have been in them for 40 plus years. As David said, it is less understood the heavy lifting that a free trade agreement, in particular an advanced modern free trade agreement, can actually accomplish. And the goal, as David said, is our task, our challenge, is how do we minimise the disruptions caused by the UK leaving the European Union, while at the same time ensuring our forward opportunities are preserved as much as we can. That's the challenge, that's the difficulty that we are trying to overcome. And we've adopted the focus on the trade agreement today without prejudice to any discussions that may happen between the EU and the UK and any other arrangements that might be concluded. But what we want people to do is we want people to engage with a free trade model, to understand how it works, to understand whether it delivers for your businesses and for your economies, whether this can actually be operable, and we obviously believe that it can be. We have started a process we launched Plan A Plus in September, which was very much a response to the direction of travel of the government after the Chequers meeting. And that was designed to talk about holistic trade policy. What does the UK's overall trade policy, not just the EU piece of this, but what we do with other countries, what we do in the WTO, what we do everywhere around the world. In December, we launched a better deal, which was designed to deal with the very specific issues of the withdrawal agreement, and in particular the Irish backstop. And we are pleased and hugely supportive of the Malthouse Compromise, which has taken that first limb and tried to operationalise it so that we get a withdrawal agreement that works for the UK and critically can obviously pass the House of Commons. And today we are launching this UK-EU free trade agreement, all 350 pages of it. As David said, this agreement is based on precedent that the European Union has already agreed. One of the things that is not, I think, well understood is the notion that the Europeans will only agree a basic free trade agreement. Actually, what the Europeans have offered is a comprehensive free trade agreement with the whole of the UK, with customs facilitations, with regulatory cooperations, and with Irish border facilitations. And we've built on that statement. We've built on that opening statement, and we've built on other agreements such as CETA, such as the Japan agreement. The Japan agreement is a very important agreement. Canada seems to get all the headlines, but the Japan agreement is a very important agreement from the EU perspective. It is the first agreement where regulatory cooperation is fully included, and it has significant deemed equivalence provisions in a number of areas. So, looking at this graphic, what it shows you is in the trade piece, the FTA piece of the puzzle, we've started with very basic trade agreements in the GATT and so forth in 1947. We've moved to include services. We've moved to include other things in trade negotiations in the WTO 1994. There are modern agreements such as CETA, such as the EU-Japan agreement, such as the CPTPP, the Comprehensive and Progressive Trans-Pacific Partnership, which the UK seeks to accede to. But we believe that there is a direction of travel here. And we have a unique starting point with the EU that no other two countries or two regions ever have, and ever will have in the future, in all likelihood, which is that we have zero tariffs, we have no quantitative restrictions, and we have regulatory identicality on day one. So part of what this agreement does is it seeks to take advantage of that unique starting point. And we have extensive, in the agreement, customs and trade facilitation measures. We have an approach to regulatory cooperation and regulatory coherence based on deemed equivalence. And that is basically that we start off at the same point, and therefore we deem our regulations, underlying product regulation, equivalent in as many areas as possible. And we have a system of management of differences, of managing divergences that occur in the future, which is based on what the EU has agreed in the New Zealand-EU veterinary agreement, for example, CETA, Japan, and other agreements, the US-EU insurance-covered agreement, where essentially what we are doing is we're saying we agree this pool of regulations are going to be equivalent, and if you do certain things, then that equivalence can be withdrawn. But broadly speaking, the countries, the parties, will not withdraw that equivalence in unreasonable ways. And the EU certainly, and the EU's member states, have all participated in OECD discussions at the regulatory level on competition and on regulatory promulgation that we base a lot of this text on. In those areas which are new or newer, none of it's really new. It's all based on the existing provisions. But in those areas where we go a little bit further in order to accommodate the interests of the EU. One of the things the EU has said very clearly, both in the withdrawal agreement and elsewhere, is that they are very concerned about a level playing field. That they don't want a situation where the UK will distort its market in ways that give its businesses an artificial edge, over the European Union. And that is why we have significant competition policy and state aids provisions in the agreement. And in financial services, which Barney will talk more about, because that is so important to the UK and is one of our leading exports, of course, we need to have significant coverage in that area. In good regulatory practice, we, again, to accommodate the EU's concerns about how the UK will operate in the future, we include provisions on good regulatory practice that are drawn from modern trade agreements to say that we should promulgate regulation in ways that lead to a pro-competitive outcome, that lead to growth, that lead to mitigation of disruptions between both sides. David's point about the headwinds in the global economy is very, very important. This is a big global event. If we get this wrong, it will have big global consequences. If we get it right, and we think a trade agreement is the way to get it right, it will actually, we think, have benefits for the world, because what we want to do is move all all domestic economic regulatory systems towards a framework where growth is maximised. And that is what will deal with the headwinds, and that's what will ensure that we aren't in a new normal of very, very limited growth going forwards. So, again, to conclude what David said about our starting point, we wanted to put legal text on the table so that stakeholders can engage with it. We don't pretend that we ourselves, with our very limited resources, have answered every question. Of course we haven't answered every question. What we want to do is put this text on the table so we can now engage not only with our own stakeholders in the UK, businesses and consumers and others, but also critically with member states and with the European Commission. There are some areas of the agreement that are going to be very straightforward, and there are going to be other areas where a deeper negotiation will be required, and therefore it's really important that we start that process as quickly as possible. So we commend it to you. We hope you will have lots of questions about it and lots of comments that will refine it and make it better. And with that, I'll hand over to Barney to talk about financial services.
Thank you. So I'm a partner at Sherman & Sterling and a financial institutions lawyer, and essentially operate in the City of London and the global financial markets. I haven't been involved in or associated with the other publications that Shanker mentions for the IEA and Legatum and Computeri and so on. But I thought that the idea of putting together a consolidated legal text showing what we as a country would regard, or some people regard, as a good trade deal outcome, or at least a straw man for discussion, and obviously everyone will have their views on how to refine and improve it, and there will be negotiation to be had with the EU. I thought it was a super idea, and I'm delighted to have contributed the financial services chapter to the text based on publications I've produced previously focusing on financial services. Financial services is a key UK industry. It's a huge success story. There have been 4 global financial centres in the last 400 years. Antwerp and Amsterdam, both of which were destroyed by war. Then London, and then latterly, in conjunction with London, jointly, New York. And that was in large part because a third of London's infrastructure was destroyed in the war, and an awful lot of our people. It's a very precious asset, but it's a pretty immobile asset. It takes a very big geopolitical event to lose it, and that's a big backdrop to this whole discussion as to where we're heading. It's not dependent on the EU or the EU's regulatory arrangements, although it does benefit from them insofar as they can be made to be favourable. Now, right now, for financial services, there is a single market which has been created since, well, I'd say the late 80s, 90s. It accelerated after the financial crisis 2007, 2008, and it essentially allows institutions here to offer financial services predominantly in the wholesale markets, i.e. not the retail markets to consumers, but in the inter-business market to corporates and other financial institutions, all across Europe, being regulated only once here and supervised only once here. And that's alleviate. Basically, in financial services, there aren't tariffs. It's a sui generis area in the sense that the barriers are in the form of regulation, and the costs imposed by complying with a multitude of regulations are very significant. And this is a benefit that within the EU we only comply with one set of regulations once. When the passport, which is this concept, was first introduced, it was based on a mutual recognition of standards that had to meet certain loose high-level outcomes. That was in the 90s with the Investment Services Directive and then with Banking Consolidation Directive for banking and investment business, and there was something similar for insurance. Latterly, after the financial crisis, with Monsieur Barnier being Financial Services Commissioner after that time, the narrative then, in my view, wrongly being that the UK Anglo-Saxon system of regulation has mucked up. Actually, that wasn't true. It was to do with all central bank oversight of systemic risk, not particular rules. But that was the narrative, and there was a development of a single rule book across Europe, which is produced by a committee under qualified majority voting. And that single rule book is applied, and it's applied here, and compliance with that, as supervised here, allows non-duplicate access or selling to businesses across the EU 27 and vice versa in compliance with one set of rules. That's where we are now. There is a benefit to that. The other single market, of course, is in goods. There isn't that much of a single market in the remainder of services in reality. We can actually preserve all of those benefits of the passport under another EU concept, which we were part of developing, called equivalence, which has been introduced and rolled out in a patchwork way in financial services regulations and directives since the 90s. And what I have done in previous publications with Politeia is set out text as to how to do that, and I've contributed a chapter of treaty text to this publication which shows how that's done. Now, what needs to happen, and I should say, the concept, I published it first in July 2017, was then accepted and adopted by the UK government and adopted in its in its post-Chequers white paper proposals, and it is also accepted in the UK-EU political declaration. So we're starting from a position where both parties think in principle this is a good idea. Now, what needs to be done in the legal text is to true up all the equivalence regimes to the same methodology, which I've done, fill in the gaps because as it's been introduced piecemeal, there are gaps for certain types of businesses. So, for instance, cross-border lending or primary insurance are not covered. So fill in those gaps and then provide for an agreement which creates certainty for businesses so that they know the rug's not going to be pulled away from under their feet at no notice on a capricious or whimsical basis, not that it would be. So that is the proposal. Now, there are two little bits of the proposal I came up with in July 2017 and have been writing up ever since, and is in this book, text, which were not accepted by the UK government, but I think that's a mistake, and I've reinstated them. First, the UK and the EU have said, oh, well, you can't have as wide a coverage of equivalence as under the passport, and the UK has accepted that. I think that's a mistake. We start from identical rules. There is a benefit to both parties in terms of an economic benefit in having the cheapest possible financial services, which would be undermined by not having full access across all sectors on day one. That's not to say it's permanent. If the UK or EU diverges too far in accordance with the equivalence test, on which there's quite a lot of legal science, then access in a particular sector would be removed. But it seems to me we should have full access on day one. It's not the same as the passport. I know there's a political point that we can't be seen to do better than within the EU, but actually it's not the same because under the passport there's certain access, there's joint rulemaking and certain access. Under equivalence, if we decide to go our own way and we don't buy into the EU's defined outcomes, and it's all pegged to international outcomes that you need to achieve, then we would lose access in that sector. The other removal from the government is there's an independent tribunal overseeing the equivalence process and the procedures that are provided for to give certainty to it all, but the independent tribunal under the government's proposal would not oversee the meaning of the term equivalence, the application of the equivalence definition. And that's because the EU have asserted they can't agree to some new supranational body sitting above the EU. I think that's a mistake. I think it provides for certainty and, in fact, is in accordance with normal treaty practice for parties to mean what they say and say what they mean. So if the EU and we sign up to something, we should be prepared to be held to the meaning of that, and so should the EU. Both of those points I'd reinstate. Otherwise, it's as has always been, and as I say, the EU are prepared to do it. One key notable point on equivalence for financial services, and I think it's relevant for services, and in fact it's relevant in understanding the withdrawal agreement and what needs to be changed there if that's to be executable, or one aspect that needs changing there, is equivalence in EU law comes with no price tag. It's in use between the EU and the US, Mexico, Singapore, Japan, all sorts of countries around the world, tens of countries around the world. There is no suggestion, there never has been a suggestion in any of those arrangements that the countries on the other side of the arrangement need to agree to EU state aid control or social standards or environmental standards or whatever. It's a sovereign-to-sovereign arrangement. One final point on this architecture. There are some in the city who have been saying, well, actually, the equivalent's a bit too narrow. We want something called mutual recognition. And a body called the IRSG put together a paper, not text, proposing mutual recognition. But actually, if you dig into what they say in their paper, it's no better, it achieves no more than is in enhanced equivalence, because you have to define mutual recognition. How do you define it? By reference to equivalent standards, by reference to high-level outcomes, and so on. So those who think we've preconceded anything on financial services are mistaken. We haven't. This is, to my mind, the best possible arrangement, and we should do it. Now, where are we now? In my view, we should do this as soon as possible. The text that we've produced together shows, I think, a version of what good looks like, or at least where the end state would be, and everyone will have their own ways of refining and improving it, and that's fine. That's a very healthy and important process. But for financial services, we can and should move more quickly. We've agreed where we're heading. The issue with the setup in the withdrawal agreement right now is that we've got a transitional period where the UK is a rule taker. Now, in relation to goods, maybe that's acceptable for a short period while the final terms are agreed. In relation to financial services, it's very risky, because in financial services, it's utterly key that a regulator controls its own rulebook, and it can make changes dynamically as risks get identified and the markets move around. The global markets are uncontrollable in a purist sense, in a sort of Napoleonic sense, by anyone. They are something one can host. We happen to host the global markets, and we regulate them by observing things which are going wrong and pushing things back into the bubble or within the perimeter and so on. But you can't control every single thing and sign off on it. Having a rule book baked in under the existing architecture, which is permanently there regardless of what happens, plus any further rules which are added, which may be uncompetitive for the UK in a 2-3 year period, I think would be a mistake. In addition, during the transitional period, as drafted, EU state aid law applies, and I've just published something last night with Politaire explaining this, effectively gives the EU dynamic control of UK fiscal policy, because as drafted, the European Court of Justice decides what state aid they've already determined it covers tax, and the European Commission exercises full discretion on how to apply it. And the fact is, EU state aid law is a very unusual area of law, which is more political than legal, inevitably. And without any seat at the table, without any voice in the Commission and in Council, the EU, and they've already diverted most of their enforcement staff on state aid to the UK in anticipation of our transition and having no political voice, they will be able to come after the UK for state aid in a way that they won't be doing for other member states. It seems to me that's a state of affairs that is something that the UK should not agree to. We can put equivalence in place now, or we could put in place a skeleton and flesh it out very, very quickly. I've done the work. I think it's completely neutral the way I've done it. I don't think it requires great science to finalise it, but we could have an interim arrangement for 4 months or so whilst we finalise the wording. It's in the interest of the EU, and one notable point here is if you watch what the EU has already done, it already has unilaterally granted equivalence to certain key bits of the city. Why? Because of the cost to the EU 27 businesses, which would put some of them out of business if they didn't do so. So they've unilaterally already declared that central counterparties will be equivalent, even on a no-deal Brexit, as will securities depositories. And they've already entered into an MOU providing for a continuation of delegation arrangements for fund management. But much more will come, because EU 27 financial businesses will not be able to operate unless they have access to the global markets here. And without equivalence declarations, the friction costs will soar, prejudicing the balance sheets of already strained institutions. One final point is the cliff edge. A lot of people say, oh, we need to move all sorts of business now to the EU 27 in order to hedge against the possibility that the UK can't get its act together and do a deal in time. Actually, this is an extraordinary moment in legal history, that, in my view, where an awful lot of lawyers have not been doing law. There has not been public analysis of that proposition that I've seen. I've produced with my firm an explanation of why, in law, there are very, very good reasons across a number of business areas for there not to be a cliff edge, including for derivatives and insurance, such that existing contracts can continue to be performed in full to maturity and they don't need to be moved, based on laws that sit above the EU, the international law on acquired rights, and the ECHR, which sits above the EU, rights to property. This is time now for everyone to be dispassionate and cold and calculating and looking through what the actual position is for our businesses. What do we actually need to do? Do we need to be panicking? Do we need to move stuff away? In my view, no. And what does the good look like? What do we actually want to get? So the answer is we want to preserve the benefits of 40 years of collaboration, absolutely. And there's a way to do that, and the EU are already amenable to that. We need to do this and execute on it, and there is no reason we can't. And I think this whole exercise of now setting out, I think, in a consolidated form across all industry, where the UK might wish to end up, is utterly key to working out what we should then agree to in the meantime in order to get there. Thank you.
Well, thank you very much indeed. And it's a great pleasure to be here joining David, Shanker, Barney and Rocco. As I think was noted in the introduction, I might be almost the only government minister who resigned for something other than Brexit over the last 2 years. But you also correctly pointed out that I was a Remainer in 2016, but I'm very firmly of the view that democracy must be respected, that Brexit can and will work with the right agreements in place and with the right future agreement in place, which I think what this morning is very much about. I spent 2 years at the Department for International Trade, working quite closely with DEXU and others. I took CETA, the EU-Canada agreement, through the House of Commons. And I've always believed that Brexit is both a set of challenges and a set of opportunities. And at the moment, the debate is very much bogged down in the set of challenges, if you like. And we're at risk of ignoring the opportunities that are out there. And the opportunities really go back to the beginning of the foundation of the Department for International Trade. You'll recall back in the summer of 2016, the Prime Minister, and it is worth reiterating this, founded the 2 new government departments of DEXU and DIT. The purpose of DIT was actually to put trade right back into the centre of HM government. In fact, the word trade had disappeared out of the name of any government department at all after Gordon Brown in 2007, and we hadn't had a standalone Department for International Trade since 1983. So let us just remind ourselves of the centrality of where the UK is going to be looking in a post-Brexit environment. And obviously, one of those huge opportunities is the independent trade policy. Now, here we've got in front of us a published version of what a UK-EU FTA would look like. And there we need to think about the interaction of what the future of UK-EU trade looks like in conjunction with how the future of UK trade with the rest of the world would look. And this has been, I think, one of the problems in the process over the last 2 to 2.5 years has been this kind of bifurcation between the two. And actually the read across is absolutely vital. So we're looking here at what a UK-EU FTA would look like, what future UK FTAs with the rest of the world would look like, and also about our key role at the WTO as we go forward. Just to remind everybody, DIT launched, just as I left actually, 4 consultations in relation to future trade agreements with the US, with Australia, with New Zealand, and also the possibility of joining CPTPP. All of those are going well. The USTR has also announced that they are also, as the US Trade Representative, also looking at the UK agreement. They held hearings just last week on it, quite a successful day of hearings. That is moving forward. The CPTPP possibility, Prime Minister Abe and the Australians, who are now the chief movers within that group, have been an enthusiast for that as well. And don't forget all the other possibilities that the future independent trade policy opens up. For example, the possibility of looking again at the WTO Trade and Services Agreement, going back to, I think, one of the points that I think Rocco might have made about the importance of services to the UK economy being 80% of our economy, after all. And in recent days and weeks, we've been bogged down in discussions about goods, but we mustn't forget the importance of services, and financial services, Barney rightly points out, being part of it. So those are the opportunities that are out there. It's always seemed odd to me in 2 years at the EU Trade Council meeting that they were never able to discuss what the UK-EU trade agreement would look like. And that always struck me as being a slightly bizarre situation. But now we have this text on the table, the basis of what it could look like. But none of this would be possible if we were to remain in a customs union. And that is I just want to take out a couple of minutes just to remind everybody, because I'm concerned at how membership of an EU customs union has crept back into the debate in the last week or two. I am firmly of the belief from my time at the Department for International Trade and previously my time at Treasury, how unhelpful being in a customs union with the EU but without a seat at the table would be. It's like without a seat at the table and those kind of talks and the way that approach, you can almost be guaranteed that you're going to be on the menu. In other words, the EU would negotiate on behalf of the UK, being in the Common Customs Union with the UK, would effectively offer up access to UK markets as well as access to EU markets, with no guarantee that anything reciprocal would happen for the UK. I was talking with the Turkish embassy last night, who talked to me how it works for Turkey. They are in a not dissimilar arrangement. They're in a partial customs union with the EU, and that definitely does not work for them. That's partly called the Turkey trap, but also when you think about it, if the EU goes into a trade negotiation offering not only access to its 450 million consumers, but to the 65 billion consumers in the UK, we may think the EU might make some requests on our behalf, but in the inevitable horse trading of trade agreements, I think it stands to reason that the UK requests would probably be some of the ones that would be the first to be discarded in that trade negotiation. A couple of other areas and why I think a customs union would be bad news. The first is on trade remedies and trade defences. It wouldn't be clear who would be running our trade defences. So at the moment, you'll know there's a large number of measures in place against dumping, particularly from China in steel and ceramics and other areas. Who would run those trade defences in a customs union with the EU? And whoever's running it, would they run it with the UK's interests in mind? That is a big question mark. And also on trade preferences with the developing world, also incredibly important for our foreign policy, conflict and security considerations. But again, that would be run out of the European Union. At the moment, the UK has got the leading voice on how we give trade preferences for developing countries in the EU's GSP and GSP Plus schemes and so on. Without the UK voice there, we would just have to follow what the EU decision on that was. And that has big cross-cutting impact on large parts of our other policy, our foreign policy, and also our development policy, conflict and security policy, the influence we would have in countries like Pakistan, like Bangladesh, which is shortly probably going to be in GSP Plus soon. All of these considerations, I think, so the customs union, not only does it exclude an independent trade policy in the future, but also closes down really important parts of UK government policy elsewhere. So finally, as David and Shankar and Barney have said, this UK-EU FTA builds on precedents. These are, in most cases, things that the EU has already agreed to do. Minimises in other trade agreements. This minimises disruption with the EU, whilst also keeping alive those other global opportunities that I think will be so vital to the UK in a post-Brexit scenario. So I commend this document to you, and let's get on with it. That would be my final call. Thank you.
Great, thank you. We have time for questions. We've got 2 roving mics, so can I see a show of hands of anyone who would like to ask a question? We have some questions up front. Brian, could I ask you to come to the front, please? Could you just say your name and where you're from, please, and a brief question?
Jonathan Nisby, Brexit Central. David Davis, I think I'm right in saying that you were basically overruled by the Prime Minister at the beginning of this process when you wanted the trade agreement to be negotiated in parallel to the divorce process. Obviously, there's now this draft trade agreement on the table here. In the light of the current issues surrounding the Irish border, how does this fit into that? Would adoption of this trade agreement basically negate the whole furore that's going on that issue at the moment?
Well, to a very large extent, the issues are separable. That's why I started out by saying that this is built on the presumption that the Malthouse process will deliver a result, and that will deal with the withdrawal agreement, which in turn will deal with the Irish border. But one of the reasons for arguing for sequencing to be done in parallel, for the negotiation to be done in parallel, is that some of the answers to the Irish border issue are dependent on the subsequent free trade agreement. So, for example, if you have no tariffs, that makes the border easier to manage because that just reduces the financial issue to taxes that are currently managed at the border. If you have mutual recognition of regulation, that also reduces the issue. In fact, reduces the issue to nearly nothing. So that was the reasoning in it. One of the reasons, I think, and you have to interpret these things rather than necessarily know them, but one of the reasons I think the Irish took the stance they did was a belief that the free trade element of the negotiation would take forever. And so after the implementation period was over, they will be left exposed for years and years and years whilst we hadn't got an agreement in place. One of the purposes of this is to make it faster and more certain to get to that agreement. So again, that should facilitate the Northern Ireland issue. But at the end of the day, there's one other thing to say here, and it's this. I think all of the technical issues with respect to Northern Ireland, which Malthouse and so on are dealing with, are manageable. But you've also got political issues as well. Now, that's not to diminish the political issues. In Northern Ireland and in Ireland, symbolism matters enormously. And so managing the politics is also very important. So I think what this should do is make that easier to achieve, but they are separated processes, and I've deliberately separated them because the people doing the Malthouse negotiation, as it were, internal negotiation, have their own views. They may not necessarily agree with this, but in a way it doesn't matter because they're separate processes.
Okay, next question, please. B, over here on the right.
Khalid Nadeem, South Asia Middle East Forum. What I'd like to know is, do you think this free trade agreement would help us about the movement of jobs? I was the other day with a friend from Goldman Sachs, and they told me that they're trying to move people very quietly to Europe, and a lot of people, in fact, in the bank don't want to go to Europe; they want to stay here. So there is a feeling that jobs are being lost with Brexit. And what is the actual number of jobs, I'd like to know, have been lost in the city to Brexit?
You want to go,
No. Well, the estimates are at the moment are around 2,000. I think the PRA estimates up to 5,000 in this first stage. No jobs need to move if enhanced equivalence is adopted in the form in this proposed text at all. So we're exactly where we are now. And I think that's the sensible outcome. And the EU have already indicated, as I mentioned in the political declaration, that they'll accept a lot of that. But I do think it's key, as part of this renegotiation happening at the moment, that we don't just talk about the Northern Ireland Protocol and amend that, but it's also important that we amend the political declaration to make quite clear that in any eventuality, enhanced equivalence will mimic the passport in terms of its scope. If we do that, this whole point will go away for everyone's benefit, including the EU's benefit. I agree, in reality, it's going to be a relatively small number because an awful lot of people don't want to go to the EU 27, and I've heard even some continental European banks can't get their own nationals back. So it's not so dramatic, but it's unnecessary. It's actually damaging to the EU 27 economics in themselves, and we should change the political declaration. The EU, I note, has indicated it's prepared to change the political declaration.
I mean, just to give a tangential comment, Goldman Sachs obviously have a very different view of quiet to me, given the stance of their chairman at the beginning. But even their chairman, having made a rather OTT comment at the beginning, now accepts he overestimated the issue.
I mean, the answer to your question is how much of the disruption can you avoid? And that's why what we've put on the table is an advanced comprehensive free trade agreement. If you ensure that the disruption is minimised, then fewer people have to move. But I would also say that in our services section of the agreement, where we talk about all the modes in which services are provided, providing services through consumption abroad, through cross-border supply, through commercial presence, and also the movement of natural persons, we want to be as liberalising as possible between the UK and the EU, and that's the text that we've provided.
Okay, great. I'm going to take the next question. Brian, here.
Thank you. Bernard Jenkin, MP. There is still quite a possibility that we will be negotiating an agreement like this after we've left without a withdrawal agreement, so that there has been talk of relying on GATT Article 24 for a basic trade agreement in goods to tide us over with zero tariffs and zero quantitative restrictions until such time as an agreement like this can be put in place. Can you explain how that actually works? Because plenty of people are spreading scepticism about it and about its practicality.
Yeah, there's been a great debate about Article 24. I didn't think when I was a young trade lawyer that Article 24 would receive such wide attention as it has now. What I would say about Article 24, first of all it does is it says that free trade agreements are legal under the WTO system if they are trade creative and they cover substantially all trade. That's all Article 24. That's the purpose of Article 24. Because we prefer liberalisation at the multilateral level. Now, if we are in a situation where we are leaving without a deal, without a withdrawal agreement, and we exit the European Union without a withdrawal agreement, both sides, and in fact the European side probably more even than the UK side because of the way they export more agriculture and goods to us, $29 billion surplus in agriculture to the UK from the EU. They will want to have a very basic free trade agreement in goods and agri-food with zero tariffs and no quantitative restrictions. That is perfectly GATT compliant. That simple agreement is perfectly GATT compliant. Now, of course, from a UK standpoint, we are going to want in any kind of trade agreement relationship with the EU full coverage in services and all these other things where we tend to have major offensive interests, and therefore we would agree, or we would seek to agree, and it has to be done by agreement, but we would seek to agree a period of time. So you'd have a 2 or 3 year period while this very basic agreement was in place, during which time you could negotiate the rest of the agreement, which we would seek to do so that everybody knows that at the end of this period you're going to lose access unless you've concluded this comprehensive trade agreement. That's how the process would roll out. It does require the UK and the EU to agree something. But I suspect, one of the problems, I think, is this notion that no deal or leaving without an agreement is an end state like a free trade agreement or like being in the EEA or like being in the customs union. It isn't. No deal is just what happens if you don't agree a deal. It will not last very long. because both parties will be under enormous pressure, particularly on the European side, on agriculture. Bavarian dairy farmers, French farmers, etc., will need to have zero tariffs and no quantitative restrictions into the UK economy. It will be very bad indeed for European farmers to suddenly have agricultural tariffs and agricultural quantitative restrictions. And since French farmers are frequently on the streets for lots of reasons, actually losing market share in a major and protected market like the UK will absolutely concentrate the minds of people. So I suspect that even if we leave without an agreement, that sort of basic agreement would be arrived at fairly quickly.
Okay, great. I'm going to take a few more.
Just to add one point there. The financial services enhanced equivalence segment is not a necessary part of an FTA. So the EU has got equivalence relationships with all sorts of countries with which it doesn't have an FTA. So even on a no-deal scenario, and I've explained why the EU needs equivalence of some measure anyway, we should seek an enhanced equivalence deal, and that can be achieved not if it's not under an FTA, because an FTA has to cover substantially all the economy. It can be done under a so-called mutual recognition agreement, which is also permissible under WTO, and that can just cover this sector.
Okay, great. I'm just going to take a few more questions because I appreciate we're coming close to the end. Are there any journalists in the audience who would like to ask questions? Yes? Okay, can we take these two in a row, and I'll take a third from the lady halfway back.
Shankar, it's Martin Brown from the Daily Express. Shankar, you mentioned in glowing terms about the Japan-EU deal. Is that something that you would like to see replicated in some way or expanded upon? And do you think that the Japan-EU deal will have a negative impact on the UK, such as with the Nissan situation over the weekend?
Mm-hmm. Okay, can we have another question right now?
Hi, this is Matt Dathan from The Sun. Just a more pressing question on the backstop. To two MPs on the panel, would you back the withdrawal agreement if the only change was a time limit in an illegal explainer?
Okay, just on Japan. The reason I said it was a good agreement is it does have some innovations in it that CETA doesn't have, for example, like regulatory cooperation and so forth. If you look for the gold standard of liberalising agreements around the world right now, it would have to be the CPTPP, the Comprehensive Progressive Trade Trans-Pacific Partnership. And it's very significant that the Japanese want the UK to accede to it. In fact, the Japanese, in the rollover arrangements, in the novation arrangements of the EU-Japan agreement for the UK, the Japanese are more interested in the UK acceding to CPTPP than simply rolling over those arrangements. They want greater liberalisation, actually, from the UK. So it's a building block. It's a stepping stone towards something greater, I think.
On the question on the backstop, throughout the last 2.5 years, I've been asked questions by journalists which go something like, if they do this, will you do that? And while it's a very good question for a journalist to answer, I would have to be very naive to the journalist to ask. I have to be very naive to answer it. I'm afraid that's my response there too. Let's see what the full thing looks like before we decide what to do.
Yeah, I would say the same just on that, it's worth remembering that the Brady Amendment talked about the replacement of the backstop with alternative arrangements. I think that has been well noted. Mm-hmm. The second point I make, just like David says, you'd have to look at all of the changes. Bear in mind, I don't think that the discussions with Brussels have even begun yet on what those changes and alternative arrangements might be. It's simply too early to say. I also voted against the withdrawal agreement whenever it was now 3 weeks ago. Due to a number of concerns I outlined in my speech in the Commons. But I think one would have to see how the agreement had changed before making a reassessment.
Just to reinforce the point, I mean, when the Brexit Select Committee went to see Martin Selmayr, he had every single one of their votes in his head. And ask them all, what would they do if this? What would they do if that? Yeah. He's trying to make an assessment of what the minimum they can get away with. Yeah. But you don't answer questions like that.
Okay, great. We have a question here in the middle.
It's Emily Hardy from Mail Online. So just to take it back to this agreement, if I was the boss of a big retail company, let's say Tesco, I'm not, but if I was, what putting this trade agreement in front of me today, how would that help me run my business, make my contingency plans for Brexit, reassure my staff, and how would you like such CEOs to engage with you to make it better?
That's a very good question. So if I were the CEO of Tesco's or any other major business, what I would want to see, for your specific question on Tesco's, for example, I would want to see, first of all, have I got zero tariffs? So products, particularly agricultural and agri-food products, can come in without tariffs. Well, we have that. Do I have good customs clearance provisions? Do I have customs and trade facilitation measures in a chapter of the agreement that would enable products to move quickly? I would look at things like trusted trader schemes. Is there mutual recognition of trusted trader schemes so that my logistics functions can actually work? I would also be interested in the scope for getting products in from other countries around the world. You know, what does the trade agreement do to getting other products in from other countries? Would I be able to negotiate a US deal? Would I be able to negotiate all of this and get products from multiple sources that would lower my costs? That would be another consideration. But with any business, there's a set of things. I mean, you've focused on exactly the right question, which is there's a set of things that any particular given business wants that they need to see reflected in this agreement, and that's what we've sought to do.
Okay, great. Are there any final questions? This is going to be last round, so I'll take 3. B, can I have one on the far side there? And then Brian, meanwhile, we'll just take one at the back, and then we will close.
Anna Mihailova from The Telegraph. David Davis. What do you think of repeated suggestions from cabinet ministers that even if Theresa May's deal goes through Parliament, the actual date of Brexit will have to be delayed? And is that acceptable to you? And if it is, what would the sort of maximum delay be that would be possible?
Do you want to answer that? Sorry.
Yes, please.
Yeah, all right. Sorry, I thought you were taking 3. Firstly, no, sort of ab initio delay is not wise in negotiating terms. If you go around and read the newspapers around Europe now, what you're seeing is an increase in the temperature of the discussion inside each country as they begin to calculate what the consequence of a no deal for them is. That's one of the reasons you've got to keep no deal on the table. And that's driving the negotiating interest. That's driving the member states to put pressure on the Commission to come back to the table with a serious change of offer. If they come back and we get to near the 29th and we haven't quite concluded it, I wouldn't worry about a week or 2 or 3. But bear something else in mind. The European Union itself cannot really countenance more than a couple of months extension because of the effect of the European elections. It's not really their choice. If they extended much more than that, we would have to have an election for MEPs. And there's one thing the European Union doesn't want back, it's Nigel Farage.
Okay. And then last question here.
Hi, I'm Adam Solomon. I run a couple companies that trade in spices and tea, and we import from all over the world. I just wonder if you could expand on Chapter 3, because I think the suggestion here actually makes it harder to trade. I mean, we import from Sri Lanka, South Africa, China, and goods are cleared the same day, unless they go through a random inspection. But the suggestion here is that it then goes to an inland facility, and then I'm paying a separate customs broker an additional fee, which is going to add time and money to what I do.
Yeah. So to be very clear, this is the UK-EU free trade agreement. So what we're trying to do is take down to the current arrangements where there are no customs checks for those sorts of products, because we are in the customs union of the single market, and to lower the clearance costs that would be applicable there. So in-facility, in-premises clearance is only a way of ensuring, particularly for SPS, the sanitary and phytosanitary measures, it's only a way of making sure that you don't need to have border inspection posts and you don't need to have all kinds of complexities that would slow trade. So the idea is to make it easier for the EU process to work. It is an alternative. If your current customs clearance mechanisms in the rest of the world are working fine because you have, for example, very low percentage checks, 2%, 1%, whatever it happens to be, or you are a trusted trader, or your logistics firm is a trusted trader, those provisions will continue. Yes, and that's pre-clearance is envisaged fully in this document. What you want to do with customs is move away from the border. The border is a tax point; it's not an inspection point, and that's what we're trying to ensure.
If from my old practical life in this area, clearance times for containers coming from around the world tend to be averaging in seconds because of pre-notification, because of electronic notification, and so on, and inspection rates tend to be in the single-figure percentages. So the idea is not to make that any worse, it's to keep that at least as good as it is now and improve it, and get the European trade to at least that standard or better. Yep.
Great. Thank you all for coming today. The full FTA, all 350 pages, is on the competere.co.uk website, along with the 2-page summary and the graphic you all have. Thanks again. Bye-bye.
Very good.